This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. I'm your host, as always, Alex Perny, and today I'm very pleased to welcome on Patrick Esposito. We're going to be covering something that was something I find very interesting, and I hope a lot of people get value from this because it has to do with, being more efficient, being better positioned, being better forward facing when setting up a business or having an entity that you're looking to do what everyone does, is make money and continue to do so. So very pleased to welcome on Patrick Esposito. He is the founder and CEO of Initiative Labs and the president and co-founder of ACME General Corp. So an impressive resume right off the bat. So Patrick, tell us a little bit about yourself. Most people have kind of an interesting career trajectory in today's world. So, kind of give us the rundown of kind of how you came to be where you're at, and then we'll jump right into the topic at hand.
Indeed. Well, Alex, first, thanks for having me. To the point of what you do on the podcast, right, around alternative investments. I've spent most of my life generally sort of in and around that space. A little bit of time in the publicly traded world, but most of my sort of almost accidental entrepreneurship career was kicked off by creating small technology startups that ultimately ended up being acquired by large publicly traded companies. And then I moved into, sort of your classic medium-sized business that was at that point an over-the-counter stock or, pink sheet traded organization. I put my entire 401k into an IRA and, went through sort of that alternative investment scenario to be able to invest in that company that now is on NASDAQ. And so a lot of what I have done in my career and after those three experiences has been focused on trying to help organizations build the infrastructure to support, a pathway towards growth and a pathway that ultimately allows them to develop the rigor, right, that makes them an appropriate alternative investment scenario, for the type of work that you do.
No, that's definitely awesome. And something, again, that I find very interesting because so much is put into people trying to say, hey, we're a great thing a great entity to invest in because we have X IP or we have this great widget
Right.
that we're making, or, hey, we're now, growing human hearts out of, pig cells. We have, a great concept, but the, scalability, the operations, the efficiencies are really kind of what, is at the beating heart of all this stuff. You could have a great concept, but if you can't take it to market and your operation is inherently flawed from, whether that's managerial, whether that's your CRM, whether that's whatever it is, It doesn't really matter. You can have the greatest idea in the world. But again, if you can't get it to market and can't, make it a viable investment for people, it, again, might as well just be smoke in the air. So let's kind of go where I want to start is, it's all great and well to say, hey, here's all the awesome things you can do, but maybe it's best to kind of frame this in some of the typical issues that you see. Because, again, it's great to say, oh, well, everyone's doing everything great, then you wouldn't have a job. You wouldn't be doing anything. Everyone's doing everything correctly. Right. So let's kind of start at the base. Let's build this pyramid and look at, what are some of the common issues that you see that are, off the bat. Maybe we can get a little bit more nuanced, but I'll let you kind of springboard from there.
Yeah, no. So, to your point around what we do with alternative investment candidates, right? So I kind of put those in two buckets, right? There's the privately held, and then there's also sort of the non-exchange listed organizations. And, when you talk to, entrepreneurs who are wired to run fast, right, and try to grow revenue and try to grow profit and try to get scale, many times it's that infrastructure piece that is, and the structure that they really say, well, I'll save that for another day, right? If you look at publicly traded companies, the structure is imperative, right, to allow for, their market viability and to allow folks to trust public markets. There needs to be that structure and that element of reporting around structure. For alternative investments, sometimes there's not as much of a structural requirement, right? And what we found is that without structure often comes risk and, unfortunately, failure. for a lot of high flying companies with a lot of investment backing, there may be certain things they're required to do. They may be required to have a governance structure. They may be required to have regular management team meetings. They may be required to do, monthly and quarterly and audited financial preparations. But what they're maybe not required to do are some of the things that are probably critically important, which are maybe they don't have enough diversification in their governance process. Maybe they really don't have a diversity of experiences in their management team. Maybe they don't have a real structure to evaluate pivots and adjustments that need to be made to the business model to support growth. Perhaps they don't have a way to really analyze and even vocalize among their team the right way to build the infrastructure to continue the growth, right? Perhaps even worse, maybe they don't have a model for how to arbitrate and make decisions when disputes occur, either between management team members, owners, or investors. And, a lot of what we do is help to sort of lay structures like those in place, as well as structures to examine, strategic growth opportunities, whether it's M&A, acquisitions, other types of business relationships. And then the two areas I think folks ignore most to their detriment, which are disaster preparedness planning and succession planning. And those are two topics that a lot of organizations don't like to think about, don't like to talk about, and are therefore not prepared when headwinds hit, right? Whether it's what we've all gone through over the past recent years with the COVID-19 pandemic fundamentally changing the way that we all worked, both in a very abrupt way in March of 2020 or even earlier, depending upon where you lived, to this transition to hybrid and fully remote work, and a lot of the issues that are coming with that for organizations to allow for their team to thrive. There's a lot of changes that occurred from that. There will be new things that will happen down the road that will change the way that we work, and to change the way that each business, right, faces the potential risks that it can confront. And there's that big risk, right, that nobody really likes to talk about, the human capital risk. And a lot of folks think of succession planning as being, how are we going to do this generationally, right? 10 years from now, when I want to move on and do something else, who's going to take the helm? The reality is that's part of it. But the other part of it is departures, where folks just decide they're going to leave, and having folks ready to step in and take those roles, or individuals who unfortunately meet their untimely demise. And how do you, on an emergency basis, cover what needs to happen as far as the growth of the business, the leadership, or certain leadership of certain functions within the business on both the near term, and prepare for a short term and midterm succession when it's not planned.
No, absolutely. So I'm not looking down at my phone. I'm taking notes on kind of what you're saying, because you brought up a lot of good points. And a few things just kind of want to start at, maybe the beginning of some particular issues that you might see with that. And I think, again, the big one I combined too, were governance structures and diversity within governance structures. So I'm assuming kind of what you mean by a little bit of diversity is that, hey, this was started by one individual and they have their buddy or their brother in there. And then they have their, aunt or their next door neighbor, and they don't really have any kind of outside opinion, or, maybe kind of an outside voice that would say, hey, maybe we should do something different, because they're all kind of conjoined into that one individual. So maybe let's look at the governance side of, let's say, okay, what are some particular big issues that people see, and what are some of the kind of, again, we have 45 minutes to talk about a bunch of stuff, but like, some kind of high level things that you would say, okay, well, if you're doing this, what are some ways to maybe adjust or look at doing it differently that would help?
Yeah, no. So to your point, where a lot of folks who are running businesses, there's two types of scenarios that I see. One is what I'll characterize as hero ball, right? Which, to go to kind of the basketball term, where you've got one player on the court who decides they're going to sort of take over the game and attempt to score most of the buckets, right? And in this case, in the business world, make most of the decisions. That's obviously one of the points that we see folks, who are starting out, or even who are reasonably mature as businesses, right? There is that single hero ball player. The other thing we find, right, are sort of the power of two, where an individual and their business partner, right, even if it's a corporation or an LLC, but the person who started the business, there's only two of them, and occasionally they may disagree. And so, what I generally encourage folks to do is think about putting together sort of a security council, in effect, right? So that there are a variety of viewpoints that can be brought to bear to help one, a single individual who's ultimately maybe the owner, an operator, make those decisions, or help a team of two or even more to come up with better informed opinions, better informed decisions. And obviously, sometimes what you need to do is legally required, right? You may be legally required to have a board of directors, or for a corporation, or a board of directors, a board of managers for an LLC. Sometimes you've got a legal requirement, but there's often not a requirement to have anybody who, any particular number, or anybody who's a non-owner, right? And so, what I've seen and encouraged folks to do is, take a look and see, do you want a formal board of directors or board of managers that goes beyond you and, your co-owners? Maybe your investors require it, maybe they don't, if you have them. But, do you want to potentially cede some of the decision-making? Or would you prefer something that's more informal and maybe doesn't have a lot of authority? Is it a board of advisors? Is it simply, a family and friends council? Is it, a group of your professional advisors who you already work with, but convening them together so that they can share opinions, lawyers, accountants, et cetera. And normally, even if it is just a scenario where you've got two partners, in an LLC who decide that occasionally they don't always agree, and they invite someone, and I've been in the situation before where they say, look, we're not adding you to our board, but we'd like you to come attend our board meetings and be there to listen, give us advice, and help us to make decisions, but not make the decisions with us. How you want to operate your governance structure really comes down to what you and your co-owners or investors, if you have them, are comfortable with. And there's a whole range, right, of ways that you can do that.
And I would say kind of what I'm kind of taking away from that is, what you kind of extrapolate that to is saying, hey, look at, take your, just to pick on Apple, for instance, you have this kind of huge $1 trillion market cap company, and the general required structures for them to be publicly traded, having a board of directors, and saying, okay, well, if that's, forgive me for saying the gold standard, but that's, the standard that we have in our markets, how do we kind of distill that down and utilize what works? Again, working utilizing is a loose term because companies have issues as well. I mean, Enron had a board of directors, WorldCom had a board of directors, but we won't. But saying, hey, how can we kind of distill this down and utilize it? And again, to your point, saying, hey, if this really works, how can we, again, show to our investors? Because if an investor comes in, they have kind of that secession thing. Okay, well, great, I love you, but if you are, kite surfing in Maui and Jaws comes around, what happens at that point? And saying, okay, well, we have, kind of a brain trust formed. We have the things in place. And I think, governance, I really feel from what you said, really trickles down into a lot of this. Having those, again, dissenting opinions, having alternative opinions, having kind of, again, whether that's something informal as having someone sit in on a board meeting, having a formal board of directors. And I think that also, correct me if I'm wrong, would probably also, how you set up the governance is going to directly related to where you want your company to go. If you're happy being private and just running this as, let's say, a 501c3 evergreen or closed-ended fund, well, maybe you don't need all that. But if your goal is to take something to market and get listed, whether that is a penny stock or whether that is something on the NYC or NASDAQ, you need to kind of have those things in place. So kind of, I would say it's kind of twofold from, and maybe this will be a good springboard, you really need to figure out where you want to go. And then also that's going to determine really what you need to do. Because if you're happy being, the small boutique firm, do you need a huge board of directors? You need to go through the headache and everything of that. But if you want to eventually go down there, I think goal setting really kind of factors into a lot of this stuff as well. Would that be a fair assessment?
Yeah, that's a great assessment. And to your point, one of the reasons that I chose to write The Structure of Success, that as a book and do it in association with Inc. And their book imprint, Inc. Original, that is supported by the Greenleaf Book Group. is because when I was first starting, right, my first entrepreneurial endeavor, Augusta Systems, which went through about 3 pivots and some other adjustments to become an early Internet of Things middleware company. If it was not for, for taking on venture investment, having investors on the board, and having an agreement with the investors to have an independent director on the board, and finding an independent director who had software sales experience, we probably would not have been able to produce a successful, transition of our team and technologies to an acquirer who was a market leader, right? Because we needed that experience set that came not just from the investors, but also from that independent board member to really benefit from, the experience that she had, getting us to the point where we could logically move the software into market at scale through channel relationships, as opposed to just individual sales efforts, and then position the company for an acquisition when the market started to move in a way that small enterprises were not going to be trusted and only large players, right, were going to rule.
Yeah, and kind of to the adage of engineers can't sell and sales can't engineer.
Right.
You need to have that again, diversity. And to the point of diversity, it's not necessarily just looking at we look at when you hear culturally what diversity is now, which is a good thing to have again, cultural diversity and things, but just diversity of gray matter in the room, so that way you can have those opinions that help drive you in the correct direction, which I think kind of leads into, again, I'm happy that my notes are kind of not having to be rearranged, but to the point of communications, because that kind of directly leads into, okay, we've looked at governance, where do you want to go? Identifying what your end goal with this is going to kind of really flesh out what works best for you, and having kind of that, I forget the term you used, but kind of the king in the castle thing, works until it doesn't. It's the two things that are guaranteed in life are death and taxes, and one of those is going to happen to that person. So it's got a life cycle. So how do you continue on? What's the succession? How does that governance play into your game plan?
That's exactly right.
Plan. But obviously, for the governance to work, you have to be able to effectively communicate. So what are some of the things that you see in businesses that are lacking in communication? Because saying communication, it's not just having a phone service or a VoIP or just having an email server that works, which is good. Email service has a tendency to not want to work. But maybe let's play a little bit into communication and how, again, extrapolating that to kind of what we did on the governance side.
Yeah. So, to your point, I sort of look at organizationally, there being really sort of 4 different types of communications, right, that are happening. And one of them is happening at the governance level, right? Because even if you have a good team together, you've got to make sure they have access to the right information to advise you properly, and also that you have a format for meetings that allow for conversations to occur, that will support not just a here's where we're going, everybody good, type of conversation. The management team and management team meetings are another big piece of communications. And I think both for governance and management, there's the verbal communications, but there's also how information flow is going to happen, both regularized for meetings and then informally, right, as little nuggets of data come up that should be shared. What's the right way to organize those communications? And I think especially when you're looking for, your team, especially the team that is engaged in client relationships, and then your clients, right? That's got to be a 2-way street communication where you're both sourcing information, as well as providing updates when changes occur. And, one of the areas I think where organizations tend to maybe not thrive, right? A lot of folks are able to nail the governance cadence pretty effectively, because most governance team members don't have a lot of time to spend communicating anyway. So it's pretty easy to be light touch. Management teams, I'll see struggles from time to time with it feeling more like a lecture series than a conversation, right? Which is obviously something that's a bit dangerous. But one of the worst things I see happening is a lack of sourcing of frontline information, right, from your team who's in the field, either selling or delivering services, and from your customers, that could really, if you were harnessing that data, allow you to figure out how you should, change what you're doing as a business, grow new areas, perhaps shelve some offerings. And so finding the right way to obtain information that is really that frontline information, and the right way to deliver information to that front line of your team and the customers about new things that are happening or changes that are occurring. I think those are, critically important.
Yeah, no, that it definitely brings up a lot of good points. And the nice thing about what I hear what you're saying is that it's not inherently rocket science. I mean, kind of the main point that you got in is that the people that have, high bandwidth but low availability need to be able to consume the information, and then the
Yep.
information they need to get out needs to be, low friction getting out down there, but there also needs to be low friction on the information coming up the chain as well, from something like customer feedback from your sales force, from everyone in the organization, making sure the information is easily accessible and easily distributed within that organization.
Yep.
And I think most people would find that as an effective tool. But to that point, it's kind of one of those things where I feel like it's easy to understand when that isn't being done effectively. If you have a salesperson that has an issue, what's, conflict resolution look like? I think that kind of really plays into, the point of your disputes. And I think disputes and conflict resolution really play an integral role in having the effective communication set up. So I think we kind of, communications, I don't think it's something we need to overcomplicate. I think people see the value in that. And it's really just kind of an introspective look of saying, hey, if I'm at the top, great. I understand that my voice carries all the way to the bottom, but how does the voice at the bottom carry to me?
Right.
It's kind of, the generality of that. And, however that works within your organization, if you have 5 people, it's making sure that maybe you have those, weekly meetings, those pulse meetings. If you have an organization of 500 people, maybe have a consultant come in and look at it to make sure that, everything, you have a good CRM, you're using, something like Salesforce effectively to get that aggregate information, and not just doing what a lot of companies do and trying to run their country on Excel, which you can, but it's not built for that. It's not a database. It's not that, a DBA, if they come in, they're going to look at it and walk right out the door. If you say, here's my content. So let's kind of focus then in on conflict resolution, because businesses are many things, but they do tend to drive disputes. Not everyone's going to agree on everything. So I'm assuming, from your perspective, conflict resolution is kind of tiered, like you talked about with communications. It's governance level, it's middle management, it's customer centric, it's Salesforce centric. So what are some things that you see falling apart with people, and then how are some ways that those can be rectified? And again, simple terms of when it comes to conflict resolution, what's that look like?
Yeah, well, to your point, and maybe we'll focus a little bit on sort of the founder or co-owner level, because I think that's the area where things, when they fall apart, it's harder to patch them up, right? One of the things that I see, unfortunately, way too many organizations doing is, they're formed, they have, if they're a corporation, bylaws. Sometimes they don't have a shareholder agreement, right? If they're an LLC, they have an operating agreement. And sometimes it may be very light touch. And the same thing for a partnership, right? They'll have a partnership agreement. It may be just enough to be legally valid, but not enough to really figure out, how do we manage when there is a disagreement? How does someone extract themselves, and what's the appropriate value of compensation if they choose to extract themselves, and what's the mechanism to determine that valuation? If we have an untimely demise, how do we manage the organization? What are the rights that the heirs have, and what are the rights that the operators have, right? And how does that work? And so, I think being able to have fairly robust governance documents, right? So discrete from the governance team, the governance documents that will inform the relationships between the owners and investors, and again, that can be through an investment agreement, or because they've decided here's a shareholder agreement, right? Or some combination of both of those that defines how those relationships take place. Defining, and maybe some might say over defining, right? The way to manage those disputes and potentially breakups. That's critically important. Otherwise, you're really likely to see a destruction of the business, a destruction of the livelihoods, and unfortunately, too many circumstances of the owners, and even a destruction of jobs for team members who have invested their lives or even a period of years, right, with the business.
Sure. And to that point, kind of my, anecdotal, outside looking in at this is that what I've seen over my, decade plus experience kind of in the
Right.
private investment sector is that, again, I can't tell what someone's thinking, but what I've seen in a general just kind of thing is that, you have the real small market people. You have, again, like the LLC. It's like, hey, we're going to bring you on as a member. I'll sell you some shares. We'll issue some new shares. Okay, we'll bring you in. But the jump from there is to something, let's say it's a limited partnership or something a little bit more formalized where you have, let's say, a Reg D or a Reg C offering. And what I feel like people really need to take away from this is one, understanding way this works, because good, bad, or indifferent, the Jobs Act, for those of you that aren't familiar, was the big block of legislation that kind of built on the Securities Act of 35 and bringing more alternative investments to the mass market. Granted, some of them you do have to be an accredited investor, some you don't. There's all sorts of different stuff. We've done podcasts on that. Check it out in our library. But to that point is that, people go to let's say an SEC attorney and it's like, hey, we want to scale. And, just like with an operating agreement, a lot of this stuff has become boilerplate. It used to be a lot more boutique, used to be a lot more customized. You can customize these things the way to the ends of the earth. But with that comes, saying, hey, I have this, check the boxes of how you're running your business. Here's the stuff you need to know. Call me if you have a question. Really understanding, because, an offering document, a prospectus, a PPM is going to include things that bind you to it, governance.
Right.
Things like conflict resolution. Is there binding arbitration? Do things, what's the state of location for any disputes arising from legal action? Where is everything going to be housed? If they're in California, do you like the flavor of having to deal with the courts in California? Do you not like the flavor in Florida? It's, all these different kind of things of, understanding how these things work, and just, again, a lot of this stuff can be, be more involved where it counts, be able to remove yourself, delegate, but understand when these structures are set up, there's a lot of things that you might think are just, hey, this is how everyone does it, but understand how that can affect you. Because just like with a simple LLC, if you have an operating agreement that's written that says, hey, we have quarterly meetings of, C-suite level managers and directors. If you don't do that and you get sued and they say, okay, show me the minutes from those meetings. Right. Oh, well, you didn't do that. Well, then, we can pierce that LLC. And then, if there's, something, we can hold these directors personally liable, just those things, the small things can get away from you. And the bigger you get, understanding those and making sure they're compliant, again, goes back to what we talked about first, is governance and understanding and workflows and communications, and just understanding what you're doing. So to that point, do you see the scalability of things when people go from one to another or they reposition themselves? Do you see a lack of understanding? Are people, generally aware of that? Or is there kind of some things that people need to understand when they go from maybe the simple LLC to, more formalized 501c3 Reg D offering?
So, to your point, what I generally see, I guess, when I see it, is usually a problem has occurred, right? Because you either have at the beginning often those foundational documents put in place, or you have someone who's an investor who sort of forces a more appropriate foundational document, right, with better definition around the areas you articulated, or you see a problem and someone says, well, how are we going to do this? Right. And there then either needs to be a determination of, okay, how are we going to agree to, valuing the stock shares that I want to sell because I'm ready to leave. Mm-hmm. Right. And how are we going to fund that? Right. And so, there's, I will say more often than not, unfortunately, there's an event that triggers that. Sometimes it's a good thing, like an investment. Sometimes it's a not good thing, right? Like a breakup that's on the horizon. So, again, I think to the point you're making, seeking competent legal counsel at formation, even though that may be a price that seems, high at that time, or saying, okay, look, we're going to start this thing. Once we get cash flowing within a year, we're going to revisit these foundational documents, right? The operating agreement, if it's an LLC, or the bylaws and shareholder agreement, if it's a corporation. It's important, I think, to just have that conversation up front and either decide you're going to spend the money to do it right, or, frankly, even do your own research and find one on the internet, right? If you want to, that that gives you at least some of the things, and then find a time to find a lawyer to help you make sure you've got it all checked off. But either way, whether it's at the beginning or shortly after the start, it's really a great idea to make sure you've got the best documents in place that look at it from a full perspective.
Yeah, and I would say to that full perspective as well, especially if you're trying to build a company, don't be so investor centric. Investors are where you're going to get your capital, is what's going to get you to the goal line. Yep. But your employees, especially if you're a startup or you're trying to gain traction, a lot of comp plans are based on stock. You have
Yep.
different types of vesting schedules. How do you deal with a dispute or someone that wants to leave on that side is going to be equally important. If your lead full stack developer has an issue, how do you deal with that? They're going to leave. It's I would say just as important as if one of your largest investors leaves. So
Yep.
not just being too centric on one, but again, looking at this as kind of an organism that needs maybe needs a little polishing here, maybe needs a shot of penicillin here. Trying to make sure that you kind of again look at these things holistically and don't hyper focus on dollar signs are big. They're
Yep.
what drive the machine, but this thing needs to be looked at again from a lot of different angles. So to that point, I think one thing I would like to kind of maybe cover as well is that, you mentioned disasters. When you say disasters, are we talking simply, death of key employees? Is that a part of it? Are you talking about hurricanes, earthquakes, acts of God, volcanoes, riots?
Right.
Kind of maybe flesh that out and a few things that people can do again in best practice to kind of help try to mitigate that or prepare for it.
Yeah, to your point, all of those things are likely disasters, right? I tend to view I guess each of the elements, right, whether it's humans or whether it's, man-made, right, as potentially a disaster, right? And so, if I look at some of the things that, we've all lived through, right, it was the transition to, remote work and trying to manage client relationships when you couldn't have physical presence, during March 2020 and even earlier if you were on the West Coast or somewhere else globally. That was an interesting event, right? That I don't think any of us really had a plan for. That's certainly something, as you mentioned, hurricanes and other, weather-based disasters, flooding, right? Fires, right? Unfortunately, as we saw not too long ago in Maui, certain parts of Maui, those are the types of things that whether we like to admit they have a possibility or not, right? They could certainly exist. The one area that I think everyone is probably really underprepared for, are things like, cyber risks, right? Because it's hard to quantify them. It's hard to decide how much risk it really presents. I think we saw a number of organizations unprepared for the collapse of Silicon Valley Bank, right? Is another thing. I think folks just thought, well, it's SVB, right? Never going to go away, right? My money's safe. I don't need to diversify that relationship. I don't really need to worry about FDIC insurance. Well, as we found out, there was going to be a giant problem for a lot of technology companies and a lot of venture investors if the federal government didn't provide more than the required FDIC insurance for all those deposits that essentially went to thin air, right?
Yeah.
So,
cough. Roku with $400 million in a checking account, cough.
Exactly, right? That's exactly right. And to your point, there are disasters that we think will never happen. But if we think about the fact that they could, and we have a plan for them, odds are pretty good we won't see 400 million being vaporized, right? Maybe we would have seen 100 million out of 400 million because we had, 3 other banking relationships and that money was safe.
Yeah, right? Exactly. And again, I think the nice thing about what you're saying is a lot of this all ties back into itself. Yep. Okay, identify risk. Great. How do we do that? Well, one, we make sure that we have good communication and, taking in the external information, getting it to the people that need it, and effective governance and counsel to that governance to make that decision. Say, hey, okay, we saw what happened with SVB. Okay, we exclusively bank with Chase. Well, what's the cost benefit to having, some other buckets of money? Do we need to diversify just our cash holdings on hand? It's really not that big a deal to have a corporate checking account at Chase and, Schwab, just making sure that you have those things broken up because, we've seen banking issues happen in the 30s. We've seen them happen in the early 1990s. We saw them in the 70s with the credit crisis. We've seen these things happen over and over again, and they do repeat themselves. Granted, they have a different flavor. Savings and loans probably not going to happen again. A crash like the early aughts is probably not going to happen again. But SVB just happened this year.
Right.
So you have things, and that was the fourth largest bank collapse in U.S. history, and that was the third, and then the fourth followed closely after that on the heels of it. So you have two massive ones that you can learn lessons from. So again, learning these lessons, being able to implement things, going through all of this stuff, I think is very key. Now, there's kind of a direction I want to take with this in a moment, but anything else that you'd like to add on to that before I pose my next question?
Nope. I'd say go ahead. Yeah.
So one thing that I really kind of like about what we're talking about is, one, making sure you have an effective workflow. You have an organization that can go in the direction for a long amount of time. You're changing the oil. You're making sure this thing's going to run forever, or however long you want it to run. So how does that effectively play into your marketability? Is it, I've sat through a bunch of investor presentations. I've read hundreds, and I'm not exact. I mean, over my 10 years, 12 years of doing this, I've read tons of PPMs and prospectuses looking at this stuff, and it's always very investment centric. And I've seen very little besides kind of the canned, required legal jargon of saying, hey, here's our succession plan. John Smith succeeded by them, binding arbitration, location of lawsuits, things like that. I feel like this is kind of a missed opportunity for people to kind of sell them on saying, hey, we have a great product, we have a great idea, great IP, great widget. But we also have a great organization. Here's how we are positioned to move in the direction we want to, not just based on the heels of this, being able to sell X for Y to generate Z growth. Really kind of utilizing that as an additional tool to help market what you have going on. Thoughts about that? I mean, do you see a benefit to doing that, or do you see that as something that, maybe isn't as important as I maybe just posed?
No, I think you're right. I mean, look, one of the things that, I often, anybody who's leading a business has things that keep them up at night, or else they're probably delusional, right? Or else they're just really great sleepers. I don't know. But, most of us who've run businesses, we have worries, we have concerns. And one of the best things you can do, I think, as a leader is to, one, share those concerns with your governance team and your management team. And two, figure out with those concerns, whether it's a problem that you think could exist or that does exist, or whether it's an opportunity you're not sure if you're well positioned to seize or not, right? Having conversations about those and being able to do an assessment of how would we potentially build a solution to that, right? I think one gets you out of that unproductive worry, puts you into productive worry, and ultimately, to your point, I think produces documents that have more risk mitigation, right, measures and plans inserted into them. And to me, if I were looking at, alternative investment, certainly something I think is presenting a more, mature and forward thinking view of the way that a business is going to operate. And, to me, those are things that I look for, which is everything may not go according to plan. So when it doesn't go according to plan, or we're a partially built team and we know we need to build more, how do we need to rebuild the team? How do we need to expand it? What are the investments we're going to make because we don't have all the infrastructure today? If we find that the market signals tell us that our existing plan, may not bear the revenue growth or profitability we want, what are the potential strategies we're going to look at to diversify, right? Or to make adjustments or pivots. And then to your point, right? I just like to know that folks are thinking about the things that could go wrong, whether it's disputes, whether it's, disasters, whether it's succession needs. I want to know that they are thinking about those things, because to me that says they're going to be able to execute effectively when headwinds happen, because they're going to happen.
Yeah, absolutely. And I mean, it maybe isn't the most congruous question to bring up now. I should have probably posted it when I was kind of going through those lists of things that you had mentioned, but pivots and adjustments, you just brought it up again and kind of cued me. That's a big one that people, I think, you don't want to think that, hey, what we're doing is inherently just, it's going to work or it doesn't. But just because it maybe doesn't mean you don't have an opportunity. So again, that's probably the hardest one for me to kind of digest. Everything else kind of makes sense. It's all, again, it's easy to grasp, much more difficult to execute. Which is good stuff. It's easy to say, okay, this is important, let's do this. Okay, how do we do it? That's a tough one. But when it comes to pivoting, I mean, that's tough on both sides of that coin. How do you identify when to pivot, and also how do you kind of bake that in? It's such an unknown. How do you bake that into a governance and org structure, at the beginning? Or, again, how would you go about necessarily doing that? Maybe elaborate a little bit on that to kind of bring us in for a landing.
Yeah, so you had brought up the topic of communications, and obviously that's really important, right? And I think, a lot of folks who lead businesses are wired to, sort of have a vision of what that business should look like. But I think part of what's required is being open to the inbound communications, right, from your team and from your clients or your prospective clients around what about that vision is right, what about that vision is wrong, and what are things you never thought of that you may need to consider. And then to your point, not presenting yourself as, to your management team as somebody who has all the answers, but somebody who's open, right, and is willing to incorporate new data to make changes to the business. And same thing goes with the governance team, right? I don't think in this era, no one is looking for, a flawless leader who has all the answers, right? They're looking for somebody who they view to be an effective communicator, an effective, steward, right? If they're investors of their resources, and someone who can bring logic and reason to decisions around investment, right? And so whether it's, the practical realities of, sales are not lifting off as we anticipated, should you really double down? Is it more doubling the sales force that needs to happen? Or is it the fact that you need to update what you're trying to sell, right? Whether it's services or products. And if it is, let's make sure that's not just a hunch. Ideally, let's make sure that it really has, some foundation in data coming back to us that validates, maybe it was initially a hunch, but it's got to at least be validated by the fact that there are signs and signals that this could be a good direction to go.
No, I think that's definitely not kind of the answer that I expected, but it makes sense. I didn't know what answer I expected. And again, it's one of those things that's hard to quantify. I was thinking, okay, I'm going to get like a punch list of 1, 2, 3, but it's way more of an amorphous question to say, hey, if what we're doing doesn't work, how do we take that in and reposition? I would say there's probably really no direct answer to it besides, again, going back to the things we covered of saying, hey, communication, how does that relay back up the chain into governance? And then how do we have a meeting of the minds? Is that a board of directors it's brought to? Is that a brain trust? Is it external counsel? What does that look like in order to make that effective decision with as much, realism as possible?
Right.
And brought in. So I think we've kind of covered a lot of great information here. I certainly have gotten some good value of kind of covering, top down what it looks like to, have, a company or an entity that you're looking to raise capital with, how you can effectively bring that in to govern it accordingly to position yourself into the trajectory you're looking to go. I would have really liked to have gotten more into the, trajectory plan of like which ones look at, which avenues better. But again, Brianna's going to pop in here and, wrote me off the stage if we go past 45 minutes. But again, I really do appreciate you being on with us today. Are there any kind of closing thoughts that you might want to leave us with, going to that point? And then also if people want to get in touch with you, if you have services to provide to that point of, again, identifying organizational issues, all of the kind of stuff that we've covered today, how can they get in touch with you as well?
Yeah, so I have a personal website, patrickesposito.com, which is used for basically information about the book, The Structure of Success, which is a framework to help build your business better. Obviously, also the two organizations that I lead, Initiative Labs and ACME General, initiativelabs.com and also acmegeneral.com are the two places you can find out more about those organizations. And of course, I'm on LinkedIn and other social platforms as well. So.
All right, great. Well, again, Patrick, I really do appreciate your time. It was really interesting to sit down with someone that has so much information regarding so many different things that I had no idea about. So, or at least, I think a lot of people have ideas about this, but having it fleshed out by someone that has experience in doing it is always great value for people. So if you're people out there that are looking to, grow your investor base, you can't just take in money without any plan on the back end. You have to have the systems and the organization to support the growth of capital and your trajectory, which I think we really hammered a lot of great high points today. So with that said, I really appreciate everyone being on with us today. My name is Alex Perny. As always, thanks you for attending this edition of the Alternative Investing Advantage podcast. Thanks, Patrick, for being on with us, and have a great day.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.